Hi guys! Welcome to my first video. Make sure to subscribe and hit the bell icon so you don't miss anything. From now on, I'm going to teach you a method that, honestly, no one has properly shown before. Today, I want to talk about market trends, how they move and why. Most tutorials out there don't cover this, and that's why I say this method is really unique. The first term you need to know is hooks. Hooks are basically neutral points in the market, but they're super important because pumps and dumps usually happen right after them. Let's break it down. At the end of a trend, when we have 3 highs and 3 lows, we say a hook is formed. What does that mean? It means the first low and high, then the second low and high, and finally the third low and high. Now that we understand the hook schematic, for a trend we actually need 2 hooks, hook 1 and hook 2, which form one after the other. To make it easier, I'll draw a schematic so you can see it clearly. So that was our hook 1 with 3 highs and lows, which we usually mark as H for highs and L for lows. And this is our hook 2. Here's another key point about hooks. They usually close at 86.4% on the Fibonacci retracement. That means the third low or third high should close at this level, just like you see on the chart. After the 2 hooks form and close at 86.4%, we can expect a rally. These are the schematics for bullish hooks. Now let's take a look at bearish hooks so you can get familiar with both patterns. Next, we'll jump into the chart for a technical analysis. I'll show you the trade I took yesterday on ZOS so you can see the exact entry point and enjoy the process. Here's hook 1. As you can see, I've marked the numbers for you. And on hook 2, I also marked where I entered. I took a 110 trade, and you can clearly see the pump on the chart. By watching this video carefully, you can easily learn this technique and start making trades like this yourself. If you liked it, make sure to subscribe and leave your comments so I can teach you more techniques.